This is Tom Nunemaker with Capital Discussions. This is my trading update for Friday, September 19th, 2014. So the market opened higher, sold off for the first half of the day, rallied, and then sold off right at the end to close down. Let's see, where are we? Down 83 cents to 2010.53. Euro is down 91 pips to 128.31, which didn't help our Euro position. Let's take a look at the volatility. As you'd expect, the VIX opened lower but climbed as the market sold off and then came off as the market recovered to close at 12.11. The October, November, December VIX futures are all parallel, no risk really of crossing, so we're in a normal state of contango and things are looking okay. So let's take a look at the SPX, a little bit longer term chart. Here's a 3-month chart with daily bars. So we did try and really break out to the upside, but it didn't hold, and we actually kind of fell back into this consolidation range of say 1980 to 2010. So we'll see what happens on Monday. If this may be just a false breakout and we just kind of stay in this 2000 area, but we'll see what happens with that. As far as the Euro goes, we're still right at the 12-month low. In fact, if I go back more than a year, the last time we were here looks like it was about July of 2013. So we're at a 14-month low in the Euro right now. The risk is that the Euro keeps selling off hard. I don't know if it'll do that now that this Scottish election is over. So let's hope it just stabilizes from here on out and goes sideways like it did for the first couple weeks in September. So with that, let's take a look at Option View. Before we pop into Option View, I do want to show you, I put a new trade on today. It was all these trades. If I boil it down to this, I did 2 lot 4 times of the October 16th expiration SPX Broken Wing Butterfly, and after those got filled, I added 1 long 1990 put. So let me show you that actually. Here's the combined SPX, just so you can see where we're at. We're at a minus 26 delta, 87 theta, minus 602 vega, up $1,100, and the new trade is here. So I put it on about less than an hour to go before the market closed. Market closes at 2200 here, so about 38 minutes before the market closed. And the position Option View saying is up $178, maybe due to volatility. We did have that nice little rundown right at the end. Let's see. Okay, so here's what our risk graph looks like. This is expiration. Right now I've got it with that long put. I didn't sell anything against it. I wanted to keep it nice and flat in case we kept running down a little bit more on Monday. But even with that, we're still at a net credit on the upside, so no risk is if we just keep going up. Obviously, we would like it to hit one of these lines, say this one in 2 weeks, to try and get up around $800 to $1,000 in profit. If it does sell off, we'll see where we are, but if it doesn't, I'm just putting this on for Mondays for the weekend protection kind of, and to keep it nice and flat. See right here, if I don't have that on, this is what it looks like, and I can overlay those two and blow it up so you can see it. Take some extra lines out, and probably have to adjust the volatility a tad. All right, so with the put, you can see it's nice and flat. Without the extra put, it starts to sell off and lose money. So I'm just taking that to keep it flat for now and just see where we go. All right, that's the new trade. This is the trade that expires on the 11th of October. It's up $950. Our short delta is at 8.96, and you can see we're in pretty good shape. Even if it doesn't sell off, if it gets up to here in the next 11 days, that's another $400 or $500 in profit. So we'll just hang on to this. And our December trade looks like this. We're basically break even on that one, up $51, well inside the tent. And again, 91 days to go on this, so lots and lots of time for this. If we want to try and get up here to this line, 46 days from now, still 72% probability profit. Looks pretty good. So remember, all in all, for the SPX trades together, minus 26.8 delta, plus 87 theta, and quite a bit of negative vega. And that's one thing that long put helps reduce a little bit, the vega. So if I right click and show you the vega column, that cuts the vega of the whole position down by 200, which is a fourth, by just adding that one long call. So it does help quite a bit. And you can see that if you take it out, vega goes to minus 800, and with this call in, down to 600. So let's switch over to the ES futures option position. So even with the drop in the euro, we're still only at an 8 delta, which is still less than what we put it on, because we've had some time pass. We've let about, I guess, 7 or 10 days go on in the trade. So this time window is shrinking, and these deltas are shrinking along with it. So basically, we're still in pretty good shape. No need to do any adjustments or anything. We're only at a minus 8 delta on our short put, and down 1300, and that's mostly, well, it's a combination of the price moving and the vega. Well, let's take a look at the volatility, actually, see what happened. So volatility actually came out a little bit, probably after that Scottish vote. So I don't really anticipate a lot of factors in the market to move it much, so I'm hoping it's going to start going sideways from here. The risk chart looks like this. Right at 94% probability profit at expiration. And if we take away one of our extra longs, when we go to this price chart zoomed in appropriately. So here's where we look like right now. If it does stabilize and keeps going sideways, we're going to be in the green in a couple of weeks. So let's hope it does that. And now that all that scare from Scotland's over, they are staying in the United Kingdom. I think it's smooth sailing from here. I don't really anticipate anything moving the markets much. So that's it for now. Have a great weekend. We'll see you on Monday for the market analysis. Next week we have Tony Sizemore on Wednesday at 4:30 with the option combination strategies. That's his managing by the Greeks. I think you'll find that interesting. We had a few requests to have Jim explain the ratio back spreads to hedge portfolios, and Jim has some friends in New York that are hedging very large portfolios, like $50 million and above. And one of the questions we had was, how would you hedge $1 million portfolio? So that's exactly what Jim is going to cover on Thursday, which is the normal time for the roundtable. So we're going to have really two roundtable meetings next week, one on Wednesday with Tony at 4:30 and one on Thursday with Jim Riggio at 4:30. So it should be a fun week, and I will see you then. Have a great weekend. Bye.